everyone, great to meet you. So I am Janessa, I'm with Cincinnati Life, and I'm going to share my screen here just in a minute so we can look at the worksite life policies, if it'll ever share my screen. Okay, can you all see my screen now? Perfect. Okay, so we'll go through really quick on what voluntary payroll deduction worksite life policies look like for you all and what we can do to help you grow some revenue, retain some clients, and also just really round out your book of business. So we're going to discuss what a group versus individual life insurance product looks like, benefits and features of the program, what eligibility looks like for folks, guaranteed issue versus simplified issue, offering products and riders that we have in the program, and then what the next steps look like in the actual enrollment process. So we'll discuss what that looks like for you all. So the difference between group and individual life insurance, group insurance is typically attached to the core benefits. It's going to be the employer owns these policies. So they have total control of the contract. The employee loses these benefits if they no longer work for that company. So the nice thing with what we offer is these are truly individually owned life insurance policies. They are offered to a group, but they are individually owned. So we do need to see every employee of the business in order to offer a guaranteed issue offering, but we are able to have some flexibility with what we are able to offer because they are individually owned. So the premiums do not change if an employee leaves, they just become billed directly at home instead of payroll deducted. And they have the flexibility to choose what they want to enroll in compared to just being a set, this is what the benefit is of maybe like 25 or 50,000 term, or it's maybe 1 to 3 times their salary. They get to have the flexibility to decide what their needs are. So this program is a great supplement to a group offering. We don't ever try to replace anything that is currently offered. This is just a great way to round out a benefits offering at no cost to the employer. And there are options for not only the employee, but other eligible family members to enroll. So that would be spouses, dependents, or guaranteed issue as well. And then we have options for grandchildren as well. They'll have just a few health questions. Coverage does become effective on the date the application is signed, so the enrollment can happen at any time of the year. It doesn't have to be included with the benefits offering. It's actually, we see better participation on an off-cycle basis because we're able to be educational and take a little more time during the enrollment process. So eligibility guidelines, who is eligible? We need at least 15 employees, 15 employees working at least 20 hours a week, but there is no minimum participation requirement. So we don't have to have like 40% of the group that enrolls in order for everyone to keep their guaranteed issue, which is really nice. We just need to be able to have access to all employees in order to offer the program. Again, there are spouses and children that are guaranteed issue as well, and then grandchildren are going to be simplified issue, meaning just a few health questions. The nice thing too is an employee does not have to purchase for themselves in order for other family members to be eligible. So again, that's the flexible, convenient aspect of the program. So some differences in underwriting. If you have gone through full underwriting before, typically you've had a nurse come into your home or your office and they've done a blood test, they've done urine analysis, they've gotten your full medical history. It sometimes can take weeks to go into force, and there's all of the underwriting on the back end. Not to say there's anything wrong with that, it just is a little more labor intensive of a process compared to guaranteed issue, where the only questions I'm going to ask during the application are, have you smoked cigarettes in the last 12 months? If yes, then you are a smoker for me. We look at smoker rates. I'm going to ask, are you working at least 20 hours a week? Yes, you're eligible. And then I'm going to ask your age. And your age is determined as of 1 month after deductions begin. So that's how we determine your rate for the year. And then those are the 3 questions I ask. As long as you stay within your guarantee, then you are eligible for the program with no other questions asked. Simplified issue is going to be an in-between of the guaranteed issue and full underwriting. There's about 11 questions I ask, and it's a yes or a no for those questions. I call them the big ones. So it's going to be questions like, in the last 5 years, have you been treated for heart disease, diabetes? What medications are you taking? Have you had cancer? Those sort of questions. And then depending on your answers, then it's a yes or a no from the underwriter. And that's if someone goes above their guarantee, or let's say we're looking at grandchildren, or if a spouse is not working, that's who would be eligible for simplified issue. Now the fun part, what the employees are actually eligible for. Ages 18 to 50 are eligible up to 100,000 with no questions asked. 51 to 60, 75,000, no questions asked. And then 61 to 70, 25,000, no questions asked. They can do a combination of products. So if someone wants to do term and whole life, fantastic. We can do that up to the amount that is guaranteed issue. Also, someone is eligible to enroll in a partial amount. So let's say it's 50,000 this year they're eligible for 100,000. They still have another 50,000 they can access at a later time that we can enroll them in at a future date. Spouses are eligible for up to 25,000 with no questions asked as long as the employee does enroll themselves. If the employee does not enroll themselves, then it's 15,000 guaranteed issue. Again, a spouse does need to be working in order to be guaranteed issue. And then anything above 25,000 would be simplified issue for the spouse. For kiddos, we have a couple options for the children. We can do an individually owned policy for them, or we can do a children's term rider. We can do both. It gives us, again, some flexibility and options for the children of what we would like to do for their coverage. Grandchildren will always be a whole life policy, and again, they'll be simplified issue. Any questions so far? I know I'm throwing a lot of information very quickly at you. Okay, great, we'll move on. So some product knowledge, we have 5 different options for what we are eligible to enroll folks in. So we have 2 terms, term 10, term 20. So it's either 10 years or 20 years for a term. The way I break down life insurance is your term is your if I were to pass away in that time frame, my beneficiary receives this benefit for the what ifs of life. You maybe have a second income, a mortgage, you have people that are dependent on your income, you have the cost of raising children, education, those sorts of things. What if something happened to my income? How would my family go about their same standard of living? That sort of thing. Term is inexpensive. It's designed for you to outlive it. And then on the flip side, you have your whole life, which is going to be your when policy, when I pass away. That is coverage through age 121. We are not outliving it, but it is designed to be your final expenses planning plus anything past that is legacy to the family. So that's the difference between term and whole life of your if and your when. We have 2 options for the whole life. We have the option to be paid up at age 65. If you are 55 and younger, that means your premiums stop at age 65, but then the policy sits and waits coverage still through age 121. Return of premium is a hybrid. It's in the middle. I call it your forced savings policy. So think of it as life insurance for 20 years. At the end of 20 years, 80% of the premiums that are paid in can be taken back as tax-free cash. That's that forced savings. Or you can keep a reduced paid up term to age 99. So there's some flexibility there. Return of premium has been very popular the last 2 years. So it's a great option with a little more flexibility quicker than a whole life. So that's when I sit down with folks one-on-one and we go through what the best option is for them. I always let everyone know that I'm enrolling with, that I'm a salaried individual. I'm here to be educational and show them the best fit for them when we're talking about what is a good fit for their needs. Some riders that we can add on for coverage. The accelerated benefit is included in all Cincinnati policies. It is a terminal illness rider. So if someone is terminally ill or confined to a nursing home, they can access up to half of their benefit early as a living benefit. The accidental death is a double indemnity. So if someone passes from an accident, it doubles the face amount. Children's term rider is a $10,000 term through age 25 for children. And at age 25, they can increase up to 5 times the amount of guaranteed issue whole life coverage. It's $1 a week. It's the most inexpensive way to get life insurance started for children. I always recommend it for folks that have kiddos that are under the age of 18. And then the last one, waiver of premium, that is going to be your disability waiver. So if someone is diagnosed as disabled, then premiums are waived after 120 days of a disability diagnosis. So these are all ways to just bolster and increase coverage inexpensively. So the actual enrollment process looks like you identify a client that is interested in offering the program. You then bring myself in and then we can talk logistics, scheduling, what an enrollment would look like. I make sure all conditions are set. We know that the employer is well aware that I need to have access to all employees. And then I do a informational meeting. This exact PowerPoint is what I present to the employees, either virtually or I do it in person. And then a few days later, we do the actual enrollment, where it's your one-on-one enrollment meetings. And those take on average 5 to 10 minutes, depending on how quickly someone decides on coverage or if they have any questions. We do the application together. We sign any forms that need to be signed. If someone chooses to opt out of coverage, we sign a waiver stating that they did not enroll. And then deductions begin the following month, the first pay period of the following month. And then I send off deductions to whoever that person is internally at that company. Any policy servicing, any updating, any re-enrollment, new hires, all of that I will handle for you. So essentially I will be an extension of you. I get to help you all do what you do best, and then I will do the enrollment for you on this process. Any questions so far? Again, I know it's a lot to throw at you very quickly and I speak very fast.
Nope, no questions so far.
Okay, fantastic. Thanks, everybody.